So FAANG stocks are your tech behemoths. You have Facebook, Apple, Amazon, Netflix, and Google. That's where the FAANG name comes from. And in recent years, we've actually seen this kind of FAANG acronym expand to something like FAANG Man, where they've added Microsoft and they've added Tesla and Nvidia into the list. Either way, it can get confusing, but the point is that these are the largest tech companies in the world. And well, here's the thing, with the NASDAQ now down in correction territory, it means that some of these giants are on sale and showing value despite their businesses still thriving. When we see broader market corrections, everything comes down. Good companies, bad companies, companies, everything gets pulled down. So you want to look for those good companies, buy them on that dip, so when they recover, you're gonna make some easy money right there. So what I want to do in this video is actually cover the FAANG companies here, compare them side by side, and try to figure out, which of these, if any, is showing us value today and which ones look interesting to buy. As always, if you enjoyed this video, hit the like button, subscribe, and leave a comment down below letting me know what your favorite FAANG stock is. Okay, so we're talking about Facebook, Apple, Amazon, Netflix, and Google in this video. If you want me to make another video with Microsoft, Tesla, Nvidia, let me know that as well in the comments. We can definitely make a kind of add-on follow-up video to this as well. So here's the year-to-date chart, just 21 days into the year, and we can see that there's some big declines across the board. Facebook, Apple, Google are all down just over 10%, and they're actually beating the NASDAQ so far this year. But then, you have two laggards here that are pulling everything down. Amazon's down 16%, Netflix is down a whopping 33%. But what needs to be noted is that while Netflix is the worst loser right now, it's also the only company that's reported their earnings so far this earnings season. So maybe this is a glimpse of what's to come for the other tech giants as well. So just keep that in mind when we're looking through the numbers here. So starting with market caps, Apple is by far the king here, over $2.6 trillion in market cap. Then you have Google or Alphabet and Amazon close together as well, around $1.4, $1.5, $1.7 trillion, somewhere around that range. And then it's a huge drop much lower than that to Facebook at around $840 billion. And then finally Netflix, the baby of the bunch, $176 billion market cap. So clearly there is a vast range when it comes to these FAANG stocks. Some are in the $1 trillion mark, some are just barely over $100 billion. But which ones provide us the best value? Well, on a PE basis, we can see Amazon is miles more expensive than the others, sitting at around, 70, a little over 70. Netflix is around a 35, even after this current sell-off. But then we have Apple, Facebook, and Google seem to be more reasonable at around a 20-ish, 20 to 30 PE. But here's the thing, before you jump and say, well, clearly Facebook, Google are the cheapest, so those are the best buys, you gotta understand not all companies make sense to value from a PE perspective, especially ones reinvesting into the business heavily, and you're going to see a lot of that benefit in future years. That's kind of where Netflix and Amazon are at. So there is a chance that those companies actually outperform these other companies in the next, say, 3 to 5 years. So let's look at prices sales then, and we can see here that the average seems to be around a 6x range. Netflix actually dropped down now to the low 5x, and Amazon's around a 2.76x. One thing you have to note though is that historically Amazon has always traded at a discount, and this is mainly because the core of their business, the e-commerce part, revenues are super high, but margins are not that great. They don't make too much money off of that. But on the flip side, they do have AWS, which is highly, highly profitable. So that kind of balances out here, and apparently around a 2.7x is reasonable for the market. But what I think is more interesting is actually Netflix here dropping from a multiple of over 9 to now around a 5. So it almost got cut in half here. And this is a huge contraction that's worth noting for a FAANG stock. Now the next thing I want to look at is free cash flow, and this is the amount of money that these companies have every single year after all their expenses are paid for. So here we can see Apple is the king again, over $100 billion in free cash flow. But what's interesting is that Google is actually catching up quite rapidly, now sitting at $72 billion, and in a few years it may actually overtake Apple at this growth rate. Facebook and Amazon produce similar free cash flows, but one thing worth noting is that Amazon has been relatively flat in recent years, where Facebook has actually climbed consistently. But then again, on the flip side, Amazon's investing heavily into the business right now. They're not focusing on building that free cash flow, those profits. So in a few years from now, that story may look completely different. Netflix is the outcast here, barely turning positive free cash flow projection for the next 12 months, sitting at around $1 billion. So we can kind of start to see now why Apple's market cap is the most. It produces so much cash flow compared to these others. We can also see why Netflix is the smallest, because it's barely free cash flow positive. So these are definitely things worth considering when making a decision on which of these stocks makes the best sense to buy today. Now, the final thing I want to show you here is the revenue growth for these companies. And we can see that Facebook's actually expected to grow the fastest, but most seem to be in kind of that teens range for revenue growth, with the only exception being Apple at around a 5% growth expected. Okay, so that's kind of the stats, the data behind it. Enough of that for a second. Let me share my thoughts here at this point. So Facebook's actually pretty interesting because it provides a good balance of free cash flow growth, revenue growth, and a reasonable valuation all packaged in one. Apple, on the other hand, is by far the most money-making company. Their free cash flow is over $100 billion, but they are also growing extremely slow for the next few years. That's what's projected. Amazon doesn't seem to be growing free cash flow much, but they are reinvesting in the business heavily, and they have potential to maybe see this realize into some great profits in the next few years. Netflix here recently saw its valuation get slashed almost in half. It's sitting at, under $200 billion in market cap right now, and it's just turning free cash flow positive now. So perhaps in a few years, if they're able to prove a few $billion in free cash flow and keep growing that, this could be a good opportunity too. But then finally, we have Google, and Google provides us what seems to be the best of all worlds. Strong free cash flow growth, and it's actually growing rapidly, strong revenue growth, and a very reasonable PE as well to go with that. So definitely a lot to consider here. Now, if I take in all this information, I try to think, okay, what's the best investment today? It's kind of tough, and I would say this, it really depends on what you're looking for. If you're looking for the best value, I think Facebook or Google is kind of the way to go here. Provides you a ton of stability, great PE currently, and lots of room to grow ahead. If you want the best growth potential in the company and kind of, seeing their stock price and their market cap grow rapidly over time, I think Netflix is a good bet here, because when they turn free cash flow positive and that number starts growing exponentially, investors will start flooding into this, and this could be, a $400 or $500 billion company at some point. But if you're someone that, wants to bet on investments in the business and kind of the future of a business and a company that's proven how dominant it is over the last few decades, Amazon seems to make a lot of sense here because they are betting big on the future, and those bets could pay off nicely for the stock. And finally, that leaves us with Apple, and personally, I wouldn't really consider Apple here at this point, even though it is a great company, obviously the best company in the world here in terms of market cap and free cash flow and stuff. But, its growth potential isn't that impressive. It seems to be plateauing, and it may plateau for the next couple of years. And there just seems to be a lot of, what's next for Apple now that they've already kind of dominated a lot of the markets that they're in. Maybe it's VR, AR, self-driving cars, electric cars, who knows? There's a lot of speculation out there, but maybe the market re-rates this back lower now, and the PE may actually come down to the low 20s or even the teens where it's historically been before. So, which stock is the best really depends on your personal preference. I do want to state that I personally own all of these stocks except for Google. So I'm actually a huge fan of a lot of these tech companies here, and I actually have personal money invested in them. But hopefully I was able to cut out my bias, and you can't tell from this which one of these is my favorite, because, each one of them has a reason to be in my portfolio, and as long as those reasons still remain true, they'll remain in my portfolio. So anyways, guys, hope you enjoyed this video. Again, if you want to see me tack on Microsoft, Tesla, Nvidia to this list, let me know in the comments down below. We can make a part 2 of this video. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.